So, first off, now how do you actually um what are the ways to actually claim the property? I'll explain that as well, but I'm just going to tell you kind of how it actually worked there. So when I entered, I signed my name and everything like that, and like I said, you pay 10% right then and there until the end of the workday, which is 4:30, and then you have 15 days to pay off the full amount, right? And you also have to think about it's so yeah, there's going to be a good amount of people there, but I'm going to tell you just now, a lot of people are going after things that are 13,000 or less because it's a lot less, like genuinely. If you're looking at something that may be like 26,000 like this, if you look for something that's 26,000 or above, mind you, less people will be interested in it because most people are trying to claim the property. I didn't see a whole lot of investors there who knew exactly what was going on. It would just seem to be a lot of locals who wanted to get into the kind of just see what it was like and also buy a tax lien of their own and go through the process. And also keep in mind, they don't give you information on how to contact these people. That's down to you. So if you don't know how to actually search for people, skip trace or whatever, and also have a person get a person's contact, this might not, you might need a partner or something. And I'm actually really into that type of stuff, and I could show you how to do it. I can make a video on how to skip trace and stuff like that, but you can let me know in the comments. But that's something that's up to you. Just keep that in mind. So I'm in the tax auction. I'm sitting maybe near in the middle row or whatever, and I was there with my family, of course. And so they start off, like I said, they read it by the serial number. So if you have this list and you want to edit it, because I made an Excel to narrow down exactly what I was going after, but I took off the serial number. You need the serial number because that's how they read it. They read it based on the serial number and the list that they give you in person, they go from top to bottom. They don't read it. That's how they do it in the order that's given. And they read the serial number, then they read the full address. And then after that, they read the updated taxes, the updated interest. Well, sometimes they don't really read that, honestly. They read this and then they read the updated total. And they might even just mention the block lot number. And that's about it. Then you're able to say whatever your amount is. Originally, people started at 10%, whatever, whatever. But then people start getting to zero. Now, now that you understand pretty much how that bidding works, why should a person not go for zero? And before I explain that, I have to explain what are the ways to actually claim the property if you're going after the property. This is not if you're going after interest. If you're actually trying to get the property and the rights to the property, you have two ways to mainly claim it, or three, pretty much. Three is a long way. So I'll start from the shortest. So this is June. So June 30th is the last time to make their payment, and July 1st is when they make their tax payment. So the first way would be through interest, let's say. No, yeah, through interest, I'll say. So when the person has to pay you interest semi-annually, either January 1st or July 1st, they have to um send it to you directly, however much the payment is. But you also have, this is a negotiation too. So you negotiate with the seller, with the person who's actually the homeowner, and you have to negotiate these terms. You can't just write out, be like, well, this is what I'm expecting. That's why you have to call them and actually find out their information. So when you call them and find out their information, that's when you negotiate the terms, and let's just say they agree to just the amount is to be paid um let's say every month. I don't know how this negotiation process goes. They could just say no, and then but they still have, actually, I'll explain that later. So, interest. they pay it semi-annually, and if they miss one payment, they still have they if they miss one payment, then you're able to go after them for it. I'm assuming that it's going to take two payments though. They have to miss a year's worth. So if they miss the first one, which is in January, and then they also miss the second one, then then you can foreclose on it, right? And that's a process, of course, but you can actually foreclose on that property after they miss those two payments of interest, of course, assuming you actually have interest. And that's why I said, keep in mind, if you go 0% interest, if someone just calls out and they want the property right out and they say 0%, you don't expect to claim it based on the updated interest because you can't, I mean, based on the just the interest in general, because if the interest is at 0%, there's no point in claiming on the interest if there's nothing to pay, you know? So if you're going out to 0% interest, then don't expect to be able to foreclose on it based on those missed interest payments. The only other way is these last two ways. And number two would be having the property and you claim it based on the missed tax. So if they missed the year's tax, then you can automatically write out foreclose on it. So if they have two times, they have at the end of the year and in the middle. So that's pretty much July 1st, the same thing as the interest payment. So let's say they miss the July payment of let's say uh the actual tax and they pay half and let's say in total is five, they get 5,000 in total is 10. If they miss the 5,000, they still have time. So you can't do it based off of just that halfway mark at July. You have to wait until they can pay it in lump sum, just like many other states. You can pay it in lump sum at the end of the year, so they still have time. And then at the end of the year, if they decide no, they're not going to pay that $10,000, then boom, you can foreclose right out. And that still stays the same as if you claim the property taxes. Like if I get it this in June, right? If I buy the tax lien in June and they don't do anything in December, I can close right out, and that's only a few months, right? So that's also making sure you're checking the actual tax website and seeing if they're making those payments. And if you see they haven't been really making those payments and they're missing payments or they're slowing down on those payments, then that may be an opportunity. But that's something you got to look into. So now I explained that second way. The third way, this is the long game. They cannot pay like most likely if they have a $4,000 one and most likely they'd be able to pay it or the bank might want to pay it because they have because uh there's still a mortgage, right? So the only thing, okay, so this is another thing about the mortgage. Every other claim to the property gets wiped out after you foreclose on it because as the government entity, you're not necessarily a government entity, but you're replacing their right to claim the property. You wipe out any other claims. You have to, of course, notify them that is being wiped out, any interest in the property or in whatever's being held in that the lien or whatever. And then you wipe out the mortgages. That's a positive thing. That means you have nothing to deal with and you just own the property right out. And you could do whatever you want with it. But the bank could also just buy it. And when you send out the notification, I guess, not necessarily an actual notification, but you're letting them know that you're going to be taking the property and you're foreclosing on it. And then if they lay claim to it, you have to notify them of it. And if they notify them of it and it's a 500,000 mortgage, if they have to only pay 1420, let's say, right? They're most likely going to pay so that they could get all their money back. And then they'll have the next claim to it. Well, whoever the first mortgage is, of course. So they'll have the claim to the property and they'll most likely do it. So the higher the amount, most likely if you're going for the long game, then no one would actually want to pay it, especially if they're free and clear. If they're free and clear, then they're the only ones who are responsible for the property and to pay it. And if they have to pay 145,000 out of their pocket just to keep their property, most likely that's not going to happen. This is a 3-year period too. So those are the three ways.
This is the end of the video. Don't forget to like, subscribe, and comment what you think I should do or I should add. Thank you again for watching.